Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. We're also going to be analyzing 3 articles, to where the first one is titled, Palantir is quietly emerging as a leader in artificial intelligence AI, and I completely agree. However, this article goes into detail about some things that many investors don't know about Palantir Technologies, which really shows just how impressive their technology truly is. So remember to stay tuned for that. After this article, we're going to move on to another article titled, Going into Earnings, is Palantir stock a buy, sell, or fairly valued? So we're going to be discussing why this analyst and entire institution known as Morningstar has changed their overall perspective on Palantir for the positive. So clearly we're going to be talking about their fair value price for Palantir Technologies and how they have recently actually upgraded their fair value price for Palantir after the earnings report, which is very positive. So it's good to see how major institutions and analysts are changing their mind about Palantir Technologies PLTR stock. So with that being said, don't forget to go and annihilate that like button right now for more videos on Palantir Technologies. Subscribe to the channel for more videos just like this one. Subscribe if you are new, and don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with that being said, I say let's jump right into today's stories. Palantir Technologies, ticker symbol PLTR, is a big data and analytics company which serves both commercial enterprises as well as government agencies, and recently they had their earnings report, which caused their overall share price to skyrocket. And I already have a previous video on their earnings report, so we're not going to focus on their earnings report in this video, but instead we're going to be talking about some things that investors don't know about Palantir Technologies, why they are even better than many investors believe them to be, and how analysts as well as very prestigious financial institutions are changing their mind for the positive about Palantir Technologies. Palantir, as you already know, specializes in analytics, big data, AI, as well as machine learning, and they have been one of the most watched stocks and companies on Wall Street as of late. However, there are differing opinions about this company, because some view Palantir as just a glorified consulting company, while others view it as the future of artificial intelligence. And I think Palantir represents a far greater opportunity than many investors give them credit for, so let's dig into why investors wouldn't want to sleep on Palantir stock so we can properly assess their true value, their fair value, and where the company is headed in the future for their overall share price. In a previous video, I mentioned how Dressner Advisory Services published an in-depth analysis and report about the best artificial intelligence vendors on the market right now, and in the report it said, in rating the vendors, we consider core features, including neural network support, data preparation, usability, scalability, integration, and support for big data / open source technologies. And essentially, Dressner summarized the entire report saying that Palantir ranks as the #1 top vendor for artificial intelligence in 2023 in regards to data science and machine learning, which is very positive. But what investors don't know is that per the report, Palantir actually tied for first place with many other companies such as DataRobot, Domino Data Lab, and another company. Now, the difference between Palantir and these other 3 companies is that Palantir is publicly traded while these other 3 companies are privately held. But when we compare Palantir to the other institutions that were in this report, such as Alphabet, which is the parent company of Google, Microsoft, C3.ai, SAP or SAP, Oracle, as well as Tableau, which was acquired by Salesforce, as well as Databricks, Palantir scored higher than all of these other institutions. So this is very positive, and in my opinion, Palantir currently is laser focused on customer acquisition right now, so they can fully monetize their platforms, while also further solidifying their relationships with their existing customers and new customers. And one of the most critical ways Palantir is trying to separate themselves from other big tech companies like Alphabet and Microsoft is by offering boot camps. And essentially, these boot camps prepare engineers on how to properly use Palantir's platforms. On top of that, Palantir also decided to get involved with augmented reality and virtual reality with their Palantir mixed reality software, which is meant to be used by VR and AR headsets to assist with military training, operations, and missions. And in my assessment, I've talked about all of these in previous videos, but when we combined all of these various segments together, Palantir is being extremely calculated educated on what they are deciding to invest their research and development into and how they are marketing these products. So investors are witnessing an exponential growth rate in Palantir's customer base currently, which is going to lead to more top-of-the-line acceleration in regards to the revenue as well as bottom-line profits, and that's what investors can anticipate going forward for Palantir Technologies. Right now, Palantir Technologies trades at $18.59 per share, while analysts believe it could surge up to $25, considering their amazing ecosystem and how they are acquiring customers, which is going to increase their overall revenue and earnings. So this begs the question, should you invest into Palantir stock? Well, clearly it depends, but considering that Palantir is already a profitable company on a generally accepted accounting principles basis, also known as a GAAP basis, this gives them a huge advantage compared to their peers. Because a lot of technology firms who specialize in artificial intelligence are not GAAP profitable. So clearly the advantage here is going to Palantir Technologies. We also know that the stock trades at a slight premium compared to other companies like Datadog or ServiceNow, but when we compare them to a more related company such as Snowflake, Palantir is trading at a substantial discount compared to Snowflake. But I do want to add that honestly, the majority of technology companies trade at a huge discount compared to Snowflake because Snowflake is very overvalued right now, even though they are also a fundamentally strong company. So in the end, when it comes to being a leader in the artificial intelligence segment of the market, we know that Palantir is a leader and they rank number one in this regard. The company has literally spent 20 years quietly building out their software platforms in regards to artificial intelligence as well as machine learning, and when we stitch all of their other components together, such as their mixed reality, their AI boot camps, their artificial intelligence platform, Gotham, Foundry, and their other products and offerings, we see the larger picture that this company looks primed for incredible growth opportunity in the future, which is why this author advocates to start to dollar cost average into this position right now if you are an investor. Now, please hear me out. I have a risk management rule where I do not allocate more than a 5% initial portfolio allocation to any singular risky growth company because it prevents me from experiencing any unnecessary losses, because some people dollar cost average way higher than 5% of their portfolio and then they are stuck holding the bag for this company if it doesn't work out over the long term or if they get impatient and they cash out early. But for Palantir, this is meant for long-term investors, so dollar cost averaging until you hit that 5% portfolio allocation would be the best strategy as of right now, because this is going to allow you to average out your cost basis for this company over the long term. But that's not all, because we also have a very prestigious institution named Morningstar who recently changed their fair value estimate. If you recall from a previous video that I made, we saw that the fair value estimate for Palantir Technologies PLTR stock is $11, meaning that if your shares on an average cost basis is below $11 per share, you are sitting very pretty right now and you are primed for a long-term growth opportunity if you just hold this company. Now, many people find this Morningstar estimate rather low and conservative, but recently after their earnings report, we saw an increase in their overall fair value, to where Morningstar has raised their fair value estimate for Palantir's PLTR stock from $11 up to $13. And I know that may not sound like a lot, but believe me, that is huge because a lot of investors hold Morningstar as a very high authority source on what they should buy and sell. And now, according to Morningstar, their average fair value estimate is $13 per share, meaning that if you have an average cost basis below $13, you are now primed for a long-term holding position if you plan to hold this company for the long term. This also means that please practice proper risk management and don't overexpose yourself more than a 5% initial portfolio allocation. Now, this doesn't mean that Palantir can't make up more than 5% of your portfolio. It just means that you shouldn't take the dollar value of a 5% portfolio allocation and invest into this company more than that value. For instance, I normally use the example that if your portfolio is $100,000 and you want to invest into Palantir Technologies, the most you should invest into Palantir Technologies is $5,000. And you can use this $5,000 to invest weekly, monthly, biannually, it doesn't matter, but just don't go over $5,000 for an initial portfolio allocation. But let's pretend that you invest $5,000 and then it doubles to $10,000 to where now it makes up 10% of your portfolio. That's okay, because remember, you only invested an initial portfolio allocation value of $5,000. So just let the rest ride for the long term. If it ever ever drops below $5,000, say to $2,500, which is $2,500, then feel free to add another $2,500 to get back up to that $5,000 portfolio allocation so you can remain and retain that $5,000. I really hope that makes sense. If you have any questions about this and my risk management policies, feel free to comment down below. But I think this is absolutely phenomenal news that Morningstar has increased their fair value estimate for Palantir Technologies, and we can also anticipate other analysts and institutions changing their mind about Palantir Technologies by giving them more bullish, positive price targets as time goes on. So I'd love to hear your thoughts down below about this story, what you thought of their earnings report, what you think about their market segments, and if you think that institutions and analysts are being too conservative or if you think they are on point. With all of that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with that being said, I wish you the best of luck, and I will see you in the next YT video.